Hello, this is Brian Shannon from Alpha Trends. Today is Thursday, the 28th of February, 2008, and the market's closed here. We had the 50-day moving average, the declining 50-day moving average, hold these prices back once again as the market lost $1.14 or about 0.8%. You can see here that it's kind of coiling between that 50-day moving average, which is declining, and the advancing 10-day moving average. So nothing's really changed here on the daily time frame. We are in a primary downtrend as evidenced by the declining 50 and declining 200-day moving averages. When we take a look at the shorter term action on a 30-minute time frame here, you can see that the market held right around that 137 level, and that's where we've seen prior resistance and where we had seen a little bit of strength earlier in the week when it broke past that level. So the pullback came back to this prior level of resistance, so we can't call it broken yet, but because the primary downtrend market is, the primary trend is down rather, we do want to be very suspicious when we see a breakdown such as this, and particularly when you see that the level of support that had been holding for the last 2 days did act as resistance late in the day. Then you can make a somewhat bullish case that we've got an advancing 5-day moving average. So the clear picture is that there's nothing clear about this market right now when you look at multiple time frames, which is why when you have that type of scenario like we have now with all these mixed time frames, that you want to shrink your analysis to the shorter and shorter term time frames and try and capture some of these quick moves in here. And if you're not comfortable with that, then the best bet is to wait on the sidelines in cash until we have more clarity and you still got your capital intact to deploy when a true trend does emerge from this really range-bound market that we've found ourselves in. This 139.50, 139.70, I think is what I've been saying, is the main level of resistance right now in this market that it has to contend with in order to think that we might be able to sustain a little bit of upside. And the key level of support is going to be 132. Breaking that 132 level would most likely, I think, lead to a retest of the lows. So a lot of indecision in here, a lot of reasons to be careful. We've got that 139 level, 139.70 just above that, and then we've got the above that we've got 141, 144. So and even here in the short term, I think this is going to be significant tomorrow at about 137.70 or so. So if that if the market fails to hold above that, you can see that on this 10-minute time frame, just looking at price action, we've got these lower highs in here and we've got these lower lows. We've got this prior support acting as resistance. A lot of reasons to kind of be nervous about this market and think that it's got a good chance of breaking back to the downside. But as always, you want to be prepared for the what-ifs in the market. When we look at the semiconductors, nothing's changed there. They remain just maybe in a process of forming a bottom in here, but I definitely don't see any reason to buy, even with a longer-term time frame. Why waste your time with this unless it's been, if it pays you a big dividend maybe, but the semiconductors obviously don't. So no reason to be involved there. A lot of people ask me, can I take a look at a different sector once in a while? So let's take a look at the financials. Everyone's concerned about these. I don't like trading the financials because there's too much news. You come in, they gap up or they gap down because the Senate did this, or Fannie Mae said that, or Greenspan said this, or it just, there's too much news in there for my liking that it creates a lot of gaps. But obviously this sector is leading the market and responsible for the lot of the weakness and fear in this market. The clear level of important support here recently is this 26 area, and what we've seen occur over the last week and a half or so is that the market did get above some what was appearing to be some pretty important short-term resistance at 27.30. It wasn't able to sustain much of a rally from that, and now that rally has broken and this is heading lower, that could lead to further weakness in the overall market. It looks to me like that we're probably going to get a test of this area here, the 26.25, that's been important for the last week and a half or so. And then if that level fails to hold, which there's no reason here to indicate that it would hold, as the primary trend is lower here, we've got the market below the declining 10, 20, 50, and 200-day moving averages. and the 10 is below the 20, the 20 is below the 50, etc., this market remains in bad shape, and it's going to take one of these moves from Congress or whatever to get this thing back in shape. And you know, the AMBAC and that sort of thing was responsible for a lot of the conviction of buyers that we've seen in this market recently. That seems to hold up for now, but the overall financial ETF, the XLF here, is showing signs of weakness that are troubling for the overall market. So keep an eye on those, in particular below that 26.25 level. The Russell 2000 lost $1.07 today. That's rather 1.5%. The declining 50-day moving average continues to be a key level of resistance short-term in here. Just above that, we've got 72, and then of course the 73 area looms much larger as well. So this market remains locked, basically 68 to 73. It's right at the 5-day moving average. I think breaking below the 70 level could lead to another test of the lower range of this market, and you know, maybe that's when this market will eventually break down and continue lower. Once again, the primary trend, when you look at the weekly time frame, these are ugly, scary charts if you have a bullish bias towards the market. Listen to the message of the market. If it breaks that 70, and then, you know, we've got this this high here at 72.25. We've got a lower high at 71.5. 71.10 or so. So getting above 71.10, maybe you breathe a little bit easier for the short term, but with all that overhead resistance at 73, I don't really see what holds it up. You know, but again, there are some good stocks out there. Look at this BEXP I mentioned yesterday, saying that if it broke this trend line and above this recent resistance here, that it looked like a reasonable trading candidate with a stop near $7.20. Stock was up nearly 10% today. So if you're selective and you're in the right group, then there are opportunities to profit. I think that if you're still in this one, then you know, stop under about $7.80. The Nasdaq 100. This market was flirting all day with the you know, numerous times with this 44.50 level, and the buyers' persistence made it look like maybe they were going to be able to push it higher with these higher lows in here, these more aggressive tests of 44.50, leading me to believe that maybe we were going to see a move past that resistance level and then maybe head up towards the 46 level from the inverted head and shoulders pattern I had outlined yesterday. But again, the primary trend is lower. Don't put too much faith in those patterns being able to hold. We've still got a terrible mess in this market, and you know, there's really no reason to think that a bullish emergence from you know, 44.50 or any other level would hold for very long. So like I pointed out on my blog today, you know, if you trade this, if you're interested in making this type of trade, don't set your stop way down at 43.50 or something like that. Keep your stops very tight. Risk management is your #1 job.